Good afternoon. This is Chris Brecher with the free options video for October 3rd, 2023. Wow, look at that bond market. Talking about an ugly chart. As you see, to me, it looks like a crescendo. So what do I mean by crescendo? Just the acceleration on the downside. It's getting a little overcooked here. Now, let me just show you, though, because when I was in the different rooms today, everybody wanted to pick a bottom on the bonds. Now, I do think there's a number of positive things with the bonds. One of them is, and it's a weird one, it's so far under the 50 moving average right now that usually you get a bounce. That's one of the good news. The other good news, it's near monthly support. Now, believe it or not, the bonds are at their support zone from 2007. But the more times that I see prior bottoms or prior tops, the more likely that's a support area. So just keep that in mind right here. Right there is good support in that area. Now keep in mind on the downside, usually you get an overshoot, which is exactly what you got. But this is the next thing I wanted to show you before you get too excited about bonds. Usually after a big sell-off like you're seeing now, the first thing you get is a nice relief rally and then a test of the lows. In fact, there are a number of my subscribers that actually on the way down on the second leg down actually buy in here versus the low. Now, the other way to do it, though, is to buy when you see a mini reversal candle in that zone. So you go to a daily and you see how it's testing, and then you go to a shorter term chart, maybe a 15-minute chart, to see if you can find a little bullish pattern. Not easy now, but that's the kind of thing you have to see. So before I get really bullish on bonds. Now, the reason I'm obsessing about bonds is the bond market has gone down and it's pulled down the major indexes with it. Now, that's one thing about when they get pulled down, even if the bonds keep going down, is there a spot where they take a breath and stop going down temporarily? So that's what I thought I'd show you in this video. And I want to show you the warning signs. I also want to show you some hopeful signs. So number one, like I said, bonds hitting monthly support. I mean, that's daily, but the monthly, like I showed you. Now what I wanted to show you was a danger sign. So I'm going to go into Think or Swim and show you this because it just seems like it's easier to show you. And that's this. So on the left is going to be the long-term bonds. This is the ZB. Now, since I was on the floor, started in 1982 on the floor, the bond market had an explosive rally, and that was the beginning of the secular bull market. The bond market now on a monthly chart has actually broken that 40-year uptrend. Holy cow, believe it or not. But this is the thing that worries me. Is on the left is the bond market lately. So the bond market does this. Usually the first sell-off of the bond market, the S&P doesn't listen. And the reason is usually the first sell-off, and I'm going to put them next to each other. So the first sell-off is because the economic activity and economic numbers get better. So that's after COVID. Yet the bond market started to get hit. On the other hand, the S&P went up because the economy got stronger. So it's the first level of the bonds that don't matter. So you just keep that in mind. It's the first level that don't matter. But then when this picked up speed from here to here, that's where on the right you saw the S&P pick up acceleration on the downside, like you see here. I'm going to put the drawing so you see it better. The reason I do that, I don't know if you can see the arrow that I have. It's a big arrow, but it doesn't come through on the video. So I like to do it like this and be very visual. So you see on how that went down real sharp and how this went down on the left real sharp. So you see on how that's actually October 14th. And I just know it from doing these charts forever. and researching and researching. So that was the bottom in the bonds right there. So on the right is the bottom in the S&P. Yeah, almost the same day. That's why I have the arrow there. I was showing subscribers that today. On the other hand, though, then you had the bond market rally. And then you have the stock market rally. Now, there's a big difference. I think you see it a mile away in here. And the big difference is that the bond market is now undercut those lows, while the stock market on the right is way above those October lows. Right here, way above the October lows. So the idea in here is that something's got to give. I think the bond market, when it goes down like this, that it pulls down the stock market. And if the stock market went up because the bond stabilized, then if the bond starts selling back off, you would think the S&P would at least test the lows from the middle of October. That's not what happened. So right now, this is closer to a high than a low. So just keep that in mind. It's closer to a high than a low, while the bond market has decisively broken there. Very much scary in there. So that's number one. Number two, though, is at least the S&P is near some support. And that's what we're going to watch tomorrow. So if we can see on the right, we can see on the left, we can see the bond stabilize somewhat, then you're probably going to be able to see the S&P have some kind of good bounce. Have a great night. Talk to you later. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.